In this video, I'm going to answer one of the questions I get asked all the time about investing in gold, and that is whether to invest in gold companies or gold bullion. So I will definitely share with you my answer to that question in this video. For those of you who are new to my channel, my name is Jared Ayers. I'm a CFA charter holder, and I've been at this investing for yourself thing for about 20 years now. I've done pretty well for myself, but also learned a lot along the way, and have created this channel to share with you the lessons, approaches, strategies, and thought processes that I have developed along the way to counteract all the things that I have learned and mistakes that I've made. So before anybody can answer the question of whether they should invest in stocks or gold bullion, I think the first thing they have to answer for themselves is the reason for their investment in the first place. So for me, really, if I'm looking at gold companies, then I'm looking at equities. So if I'm looking to potentially gain some gold exposure in my equity portfolio, that's fine. But then I need to be conscious that what I'm doing is I'm evaluating an actual business, versus if I want exposure in, say, my larger portfolio to gold, and I view gold as an asset class, a little bit later on that, then I would want to specifically get focused on the bullion itself, so that I'm not, clouding my equity portfolio with specifically something I'm actually going for, which has nothing to do with the businesses in that industry. So that's just something that I think anybody has to understand for themselves first, is why are you investing? Are you investing for the exposure to the commodity, or are you looking for businesses that have exposure to that same commodity? Now, just to touch briefly on the topic of gold as an asset class, there's going to be a lot of people that disagree with that statement. They'll say that there's no way gold is an asset class. All it is a metal that you pull out of the ground and it just sits there. There's no commercial value. There's no real application other than, say, jewelry and collectibles. I guess for me, how I look at it is, in times of inflation, certainly gold does well. Of course, the same thing can be said of equities, given that the goods and services that companies produce, the cost of those things can be passed along to the consumer or end user in the form of higher prices. So that's sort of a protection against inflation. But I guess at the same time, as you can see from the chart in front of you, during the 2005 to 2012 period, so right through the financial crisis, gold outperformed the S&P 500 very, very well. And that's really probably down to mostly the fact that gold is still seen as a store of value, and also a safe haven. So in that period, gold went from, or the GLD ETF for gold went from $40 to $160, so that's a four-bagger, versus the S&P 500, which with a lot of volatility increased about 17% over the same period. So not saying that we would see that necessarily again, but that it does point to one element of gold, if you do view it as an asset class, and that is the fact that it is still seen as a store of value and a safe haven when there are macroeconomic clouds, maybe fears of devaluation of fiat currencies, etc. It is sort of seen as a safe haven and a place where people flee to seek cover. For myself and my own portfolio, that is how I see gold. I don't see it as really a long-term investment, but it definitely is a hiding place similar to bonds. So I will keep my money in gold, but make my money in equities. So depending on the economic climate, what my economic indicators and my assessment of the business cycle are telling me, then I will allocate a portion of my portfolio to gold when the analysis merits that allocation. So when analyzing these two methods of investing in gold. Like I said, gold companies are a business at the end of the day. They are effectively a commodity business, so they do take the price of gold. They do not set the price of gold, so it really comes down to their cost of pulling gold out of the ground, what their cost of production is on a per ounce basis versus what the price of gold is on a per ounce basis, and the difference is how much money they make or if they make any money at all. Historically, gold companies have not had a fantastic reputation for providing value to shareholders. In the run up to the very, very peak of gold, close to $2,000, I know gold companies were purchasing properties that would have cost them, upwards of $1,500 per ounce to extract the gold from the ground. And of course, when the gold price falls below $1,500, those properties are effectively worthless. So there was quite a few write-downs in the sort of post-2012 period where the gold price kind of came back down towards that $1,000 mark. So that's one thing to obviously consider, is at the end of the day, it is a business. You do have to analyze it like it's a business. It doesn't necessarily control the price of the commodity that it is pulling from the ground, so that's something that you do have to factor into. The bullion, on the other hand, like I said, traditionally a safe haven, traditionally a store of value, doesn't have any commercial or economic use, so it's difficult to analyze from that perspective. So how I think about it or how I invest in it is literally, like I said, just a safe haven. It's a place to hide out when things get a bit rocky, knowing that, or at least believing that, gold will continue to have the same properties, and enough people believing in it such that that's where that will drive the price of it when things get tough. So those are the things I kind of consider when looking at those two options for investing in gold, and you can probably tell what my preference is. On the company side, gold companies for me have to be compared to the universe of different options out there, and don't generally rate very highly in my ranking system, just because of the fact that they do not hold or create their own destiny. They are a commodity producer at the end of the day, so don't generally perform as well as other companies that I have screened for in the past. In terms of ways of investing in gold bullion, this is another question that I get asked from time to time. Certainly there's always the argument of paper versus physical. If you are interested in investing in the paper, then how I like to do that is either with GLD, which is the ETF for gold bullion, and it is backed by physical gold bars. Also, the Canadian Mint has actually issued exchange traded receipts of gold in two types, one denominated in Canadian dollars and another denominated in US dollars, and these are backed by physical gold held at the mint in Canada. So again, a physical backing. Every single receipt is backed by a physical holding. So unless you are thinking that the government is somehow going to steal or take away the gold from the mint in some future horrific state, then you may be cautious about holding that. But for me, trading in and out of the paper is something I need, something that's going to trade fairly liquidly and allow me an ability to get in and out. If on the other hand you either have that sort of doom and gloom outlook, or you are interested in keeping a keepsake, say coins or bars, to pass on to future generations, certainly then physical gold is perhaps the way to go. Although of course the ability to store it safely, and of course having insurance to store it, whether you store it physically yourself or you outsource that to a company that has the insurances and vaults and safes and whatnot to hold it on your behalf, that's completely up to you. But there is a cost to it, of course, that you don't find with the paper assets as much. So just again, more things to consider. No right or wrong way of doing it, of course, but again, just something to think about. So I hope you found that video useful. Again, just my take on investing in gold. If you do have any comments about how you prefer to invest in gold, I'd love to hear about it. Or if you have another way that you think is maybe gets the best of both worlds in terms of the bullion situation, then I'd also love to hear from you as well. If you like the video, please do give me a thumbs up. And if you are new to this channel and you'd like to see more of the same, please don't hesitate to hit the subscribe button, and also leave any comments you want about topics you'd like me to cover in the future, like this or on other topics as well. Until next time, thank you very much for watching.